Hello, welcome to the weekly technical analysis review for Monday, August the 19th. I'm Fibonacci on XM.com, and for this week we're going to be looking at the pound yen, the US dollar versus the Canadian dollar, and the euro versus the Australian dollar. We're going to start first with the pound yen pair. Looking at the short-term picture at the momentum indicators, we are seeing some positive momentum. Stochastics are trending outwards, approaching overbought levels. The MACD histogram has risen above its red signal line. Looking at the price action, though, we can see that the pair is struggling to make further gains. It's actually stuck around the 23.6% Fibonacci retracement of the down leg from 137.78 to 126.53. So that level is around 129.19. So if prices overcome that resistance level, the next obstacle could arrive at the 20-day moving average at around 130.44, and that's just below the 38.2% Fibonacci at 130.83. If prices do manage to recover above the 20-day moving average, it would shift the near-term picture to a more convincingly bullish one, and we can then have enough momentum to drive towards the 50-day moving average, which is near the 61.8% Fibonacci at 133.48, and just above the 50-day MA is also the key 134 handle. To the downside, though, if we do see prices losing further steam, we could see prices heading back towards that 3-year low of 126.53, and a breach of that low would then take prices towards the October 2016 lows, which was just above the 124 handle. So that 124 level is the key support to watch out for, which would, if breached, would reinforce the medium-term bearish structure. Let's now turn our attention to dollar versus Looney. We can see a bit of a mixed picture in the near-term stochastics. The percentage K line is making a bearish crossover with the percentage D line. RSI is flattening, and we can see prices are drifting lower. They've slipped below the 50% Fibonacci retracement of the downline from 1.3564 to 1.3015. If that bearish move continues within the coming days, the key support to the downside would be the 38.2% Fibonacci at 1.3225. Just below that is the 20-day moving average at 1.3217, and another potential support to the downside at 1.3180. If prices slip below the 50-day moving average, it would increase the downside risks, and it would risk shifting the neutral medium-term picture to a bearish one, and then we could see prices head back towards that 9-month low of 1.3015 we saw back in July. However, if prices are able to recover and resume that uptrend that started in late July, we could see prices once again attempt to break above the 200-day moving average, which is currently around the 1.33 handle. Above that, there could be another potential important resistance at the 61.8% Fibonacci at 1.3354. So overcoming that resistance as well would potentially restore the bullish picture for the medium-term outlook. And finally, having a look now at the Euro Aussie pair, there we are seeing immediate support at the 20-day moving average near the 50% Fibonacci retracement of the upleg from 1.5893 to 1.6785. Looking at momentum indicators, it's a rather neutral picture for the short-term RSI. Has flatlined just above the 50 neutral level, the MACD, although it has crossed below its red signal line. It's comfortably in positive territory, so there is scope for the Euro Aussie pair to resume its uptrend. If that happens, the immediate resistance could come at the 38.2% Fibonacci at 1.6444. Above that, there's the 23.6% Fibonacci at 1.6574, before heading towards that 10-year high 1.6785. If the prices slip below the 20-day moving average, we could then see the pair head towards the 61.8% Fibonacci at 1.6234. That's a potentially very important support level, because apart from being the 61.8% Fibonacci, it's also where the 50-day moving average currently lies. So breaching that key zone could potentially shift the positive medium-term picture to more neutral one, and also turn the short-term bias to a negative one. And then below that, attention would shift to the 78.6% Fibonacci at 1.6084, before heading towards that longer-term ascending trend line. So that's it from me. Thank you much for watching, and have a great day.